Welcome back, folks. I am John Najarian, and you are tuned in to 3 at 3. Every day, we bring you what's going on in the market with 3 interesting stocks that are making moves or that are about to, perhaps, because of that unusual activity. We are the guys that coined that phrase, unusual activity, and I'm about to show you some of that and talk about one that did not have that activity ahead of it. That's OLK. OLK is a company being pursued by Thermo Fisher, and Thermo Fisher is paying a 74% premium to the closing price. So that's a massive jump for OLK, which has moved up by almost 68% today. That's a big winner, as is this one on a smaller scale, though. Netflix continues to work for us, those at the money 360 puts, as we trade, as you know, the at the monies, the 365s, not the out of the money put. We are reaping the rewards of that strategy because the stock's $9 under where we own puts at that 365 strike. So some people bought the 360 puts, and more power to them. Go for it, guys. I hope you are all going to win big on it. And for people like me that bought the 365s, then I rolled down to the 360s as we broke 360. And both those are nicely in the money right now. I took the profit on the one, rolled down to the 360s from 365s. Bang. This one, the XOP, this is the oil and gas exploration ETF, as you know. XOP, we had bullish call buying in XOP earlier, in fact, just yesterday, and that was with the stock at 150. Well, it's gone up by better than $2 so far. So another nice winner here. Again, not 64% on the stock move, but small moves like this can make you a decent amount of money as long as you're buying the right strike and buying those 150s instead of the 155s, as I traditionally do, buying at the money and now selling upside calls against it. Bang. I would encourage you to check out our stock trading is not an option. Stock only trading, that is not an option, because my brother Pete and Bill Johnson will be on. They'll be talking about our book that's coming out October 30th. It's not an option. They'll also be detailing and offering you the first 30 pages for free of that book. It's not an option if you want to control your risk, because you can define your risk on entry. As I say frequently to people who ask me on Twitter, why do you trade so many options instead of stock? Defining my risk, getting a leveraged return. And I stand by that. I think as long as you know what you're doing, you can make a fabulous living out of buying and selling options. And I rarely just buy options, folks. I'm almost always buying them with the intention of selling a higher strike above the call that I bought. Or if I'm buying a put, buying an at the money put and selling a downside put against it. 1-to-1, as long as I maintain that, I'm not putting myself, the portfolio, at risk. All right, let's take a look at Occidental Petroleum, OXY, $65.30 roughly, and they're buying 69 calls for 22 cents. These calls don't expire this week on the 20th. They expire the following week, the 27th. Need to be aware of that. Also need to be aware that, basically $4 above where the market is trading, those ain't the ones I buy. Buying the 65s, and I will sell a higher strike against it. And I'll do that rather quickly because these options have fast or rapid time decay. So if you're somebody like me who wants to participate, but with less risk, this is a great way to do it. First trade, Oxy, the 69 calls that expire the 27th. Second trade is Affirm. This is the buy now, pay later player. They're buying puts, so maybe these will pay later. The November 1750 puts that expire on the 3rd of November. So that is not of course, this Friday, the 20th of October, not next Friday, the 27th, which is one we just covered, but 3 Fridays from now. And 1750 puts are approximately $2 beneath where the stock is trading. I will buy at the money puts, which I have not done yet, in the hopes of selling a lower strike against it, and thereby defining my risk, hitting my time decay, which if I just buy the option, I have massive time decay in a very short-term option like this, but I address that by selling a put under the put that I buy. So that's the second trade today. Affirm, 3rd of November, 1750 puts. They traded for 54 cents. Third and final trade, X, letter X. X, $33.33. Bulls and bears and anyway, $33.33, November 34 calls, just above the market. Call it 67 cents higher than where the market is trading right now. They bought 10,000 of these, so they're pretty serious. So these will expire approximately 5 weeks from now. 34 calls, again, either one. You could buy the lower strike, you could buy the 34s, and then start selling as we rally, which hopefully we do in this case, since these are calls. As it moves to the upside, I'll start loading in calls against the calls that I buy. Bang. Again, Pete will be on. Go to marketrebellion.com/get started to learn more about our offerings, educational and subscription, as well as go to marketrebellion.com. If you roll down that page a little bit, you'll see tonight's free webinar. And as always, with our free webinars, folks, if you sign up for it and you can't make it, or if you already know ahead of time you can't make it, guess what? We will send you a copy, a video of the entire webinar. So check it out, sign up for it. Just by signing up for it, we will send you a video that you can watch at your leisure, even if you can't attend live, or if you just want to go over it again. You want to attend live, and then you want to watch it again later, because we're sending you a copy, you can do that. Well, that's it for me, folks. I hope you have a great evening, and I'll see you tomorrow.